Good morning, Loren. Hope you had yourself a great weekend.
Good morning, Lou. I had a wonderful weekend. How was yours?
Not bad at all. And over the weekend, we received a viewer question that we relayed along to you. And you mentioned that, hey, you know what? I'd like to answer that question on the air. And I want to know if we could do that before we get started here this morning.
Yeah, this was a great question. We have a lot of personal experience with this question. The question was around Social Security benefits and filing. Obviously, with the COVID-19, the Social Security Administration offices are closed. So what is the best way to file? And this individual had heard that filing for benefits online is absolute mayhem, meaning that these benefit filings just get log jammed and not a lot gets accomplished. We have been filing our benefits for our Social Security benefits for our families now for at least 10 years, and we have always filed those benefits either via the phone or recently over the last 5 to 6 years as the online services have improved. We've been doing them online. And I can tell you, filing for benefits online, as long as you are filing for your benefit or your spousal benefit, works really well 95% of the time.
All right, that's a pretty good track record, Loren. 95% is a great percentage.
It's a great percentage, and I'm going to take it because it's easy to do. Mm-hmm. And if there are issues with the filing, then they will reach out to you. The administration will reach out to you to clear up anything that they need. But usually this process is very smooth. Almost immediately, you will receive a confirmation email when you file. And then in about 2 weeks, you should see a packet in the mail that explains what your benefits are and what day of the week you're going to receive your first payment.
All right, so it's easy then.
Yeah, it should work pretty smooth. It's not that difficult. If you do have complications or if you have issues, you can always call them on their 800 number as well.
There you go. Hopefully, Patty, that answered your question. And anybody else that may have had a question about the exact same thing. And feel free to send us questions. And we received that one via Lou Iowa Life Facebook page. And we'll pass them along to Loren so he has a chance to answer those if he has a chance to. So great job out of you for the first one that came down the chute there, Loren. Now, this morning, we're talking about something else that a lot of people are really nervous about right now. They're talking about managing the employer plan in this very volatile market that we're in.
The majority of people's retirement wealth is underneath their 401k plan, their 403b plan. It's their employer plan. And what we've been talking about since the market correction or the bear market that we've entered is how to take advantage of it. What specific strategies can you incorporate to take advantage of this market while it is depressed? One of the strategies that you can use, this is a very simple strategy. Almost everybody can do it who has an employer plan, is you log online to your account and you hit the button that says rebalance. Now, rebalancing, what it means, it's basically a forced way to do what people always tell us to do as far as how to make money in the market, which is buy low and sell high. So what the rebalancing does is, let's say you have a 60% equity portfolio, a 40% bond portfolio. Well, what's happened with these stocks over this last 30, 40 days? The value of the stocks have really decreased, and the value of the bonds have probably increased a little bit. So right now, you're not a 60-40, you're probably closer to a 40-60, maybe 35-65 as far as the equity, because the equity values have gone down. So if you rebalance, essentially what you're doing is you're selling out some of your bonds, which might be appreciated a little bit, and you're buying these stocks at a depressed price. So you're reallocating your portfolio to make sure your risk alignment is the same, still 60% equities, 40% bonds, but now you're buying a lot more shares of the stocks when you buy them because the value, the price of those shares is down. And then when this market rebounds, you're going to have a whole lot more wealth underneath that 401k plan because your stocks have appreciated with it.
Okay, so you're saying that take some of your bond, some of the profits you made from the bond, and take that profit and buy stock with that.
Yes, that's exactly it. Because really for two reasons. One is because the stock prices are depreciated. But two is you have a risk appetite for a 60% equity, 40% bond portfolio. But right now, because stock prices have gone down, your percentage of allocation to bonds is higher than what it needs to be from a risk appetite standpoint. So you're really fulfilling what you feel comfortable with from a risk standpoint, but you're also taking advantage of the stock prices while they're down. So that's an important thing. But also remember, once this market does come back up, once the stock market does come back up, you probably need to rebalance again, because the stock prices are going to appreciate, which means your stock portfolio might be as high as 70, 75%.
Oh, okay. I think I'm starting to understand what you're talking about now. So you're not just, because when you said rebalance, I thought you were going to say, oh, you're going to get 50-50 with stocks and bonds. But no, you're just taking and trying to make the amount of money that you're allocating out there or getting back in balance the way that you set up your portfolio in the first place. That's where the rebalance comes into play.
Yeah, that's exactly it. This is a risk appetite you already said you were comfortable with prior to the COVID-19, but because of the markets, the stock markets have moved so fastly down, now you have a smaller percentage of stocks than what you said you were comfortable with. And one of the easy ways to do this is there is an automatic rebalancing feature on most employer plans. So this isn't something that you have to remind yourself once this market does appreciate to go in and to do if you just push the rebalancing feature. Most of those features will allow you to rebalance automatically once a year, maybe twice a year, or maybe even quarterly. And with markets moving as fastly as they are right now, maybe now put it down as quarterly. But then later down the road, maybe you change it to semi-annually or annually.
Now, is this something you can do yourself, or is this something you need to contact a person who handles your portfolio?
The vast majority of 401k plans, you can do it yourself. All you have to do is log into your account online, go to the rebalancing tab on the online portal, and then you should get a couple different options to select from a rebalancing standpoint.
All right. This is also, you and I have been talking a little bit about that. If you are willing to take maybe a little additional risk, you're a little more tolerant of taking some chances. When these stocks are down really low, this would be an ideal time to dive into some of the ones you're thinking about, isn't it?
Yeah, if you still have some time before you're going to need to use this money from a retirement income standpoint and you have a little bit of opportunistic appetite, this is a good time to buy into some of the stocks. Certainly, a couple of strategies you can use is if you can afford it, if from a cash flow standpoint it works well, put more money into your plan or your IRA. This is a good time to do it. Roth conversions is an excellent thing to incorporate right now because the stock prices are depreciated. There's a lot of opportunities right now, but I think one of the biggest things to remember is if you're thinking about going to cash at this point, most people probably do not want to, because it will not give you the opportunity to come back once this market eventually does rebound. And we've already seen, Lou, since the bottoms of this market, the market's already up 25% since the bottom. And if you weren't along for that ride, I know the downside hurts, but if you weren't along for that ride, then you would have gotten all the appreciation on the way back. Now, we still have a ways to go, but I think we're going to get there sooner than later.
All right. Now, you've been pretty good at, looking down the road here. Just any type of ballpark figure as to when you think we might start getting back to what we were at before or not? Or do you think that's still way down the road?
A lot of this is going to be dependent upon how quickly we can open up the economy. Mm-hmm. But what I can tell you is that this week there's going to be some really poor corporate earnings reports. But the market already knows that. So that is already priced into the market. We're going to hear a lot of negativity, a lot of bad news about the corporate earnings, but the market already knows that and shouldn't react too negatively towards those reports. I think we're still going to have some rough points. It's still going to go up dramatically. It's still going to go down dramatically. But I think at the end of this year, we're going to look back and say we have recovered substantially from what happened in the spring of 2020.
All right. Now, you have webinars that are set up where people can get some more information. This would be the perfect opportunity to sit down and really absorb everything. Where can people go to get more information virtually online?
You can go to merklерetirementplanning.com, and there's really two things that we're offering. One is we're offering a webinar. We have a market update webinar that we're doing this week. We have a pre-retirement and a retirement webinar. Those are two separate things. But then also we're offering a 15-minute retirement checkup call direct with me. So if you have specific questions, specific concerns, you can have a 15-minute phone call with me on our website, merkleretirementplanning.com. there is a direct link to my calendar. All you have to do is go to that direct link and you can sign up for 15 minutes direct with me.
That is awesome. Loren, you take care of yourself, buddy, and we'll talk to you next week, man. Great job as always.
Thanks, Lou. Have a great week.
All right, buddy, you too.